In Nigeria, everyone is asking President Goodluck Jonathan to turn on the lights because, as we all know, there's a serious energy crisis in Nigeria. Electric power generation obviously is not enough, and there are big questions as to why. And so we want to take a look at Nigeria's power policy to see where exactly are the issues. And joining us to give us that perspective is Wale Shonibare, who is Director of Infrastructure Finance from UBA Capital. Thanks a lot, Wale, for coming on to the program. First of all, let's talk a bit about where we are with Nigeria right now. President Goodluck Jonathan has agreed to take full and direct control of the whole effort to boost electric power, but obviously it hasn't changed much. So where is the problem? Is it a case of us giving him a little more time, or is there a problem with our power policy?
Yeah, Wale, thanks for inviting me. Power sector requires long-term planning. It's not something you can do over a matter of days. The Power Sector Reform Act was enacted in 2005, but was never fully implemented. That Power Sector Reform Act provided for the unbundling of the power sector, separating generation from distribution from transmission. The next step was to have inaugurated the boards of those distribution companies and made them into self-standing entities, eventually to be privatized. But unfortunately, that process wasn't carried out. There was undue emphasis on the generation side, but you can't generate without distributing.
But are you now saying that we're actually generating, but we're not distributing? Or is it that we still haven't gotten it either way?
Well, we issued quite a number of licenses. I believe about 25 licenses were issued for independent power projects. But most of those projects could not raise financing because they were concerned about who was going to be the off-taker, who would buy the power once you generated. And you needed a credit-worthy entity to do that. Some of these generators asked for government guarantees, but government is reluctant to do that because you have to recognize it as a contingent liability on the national balance sheet. So it goes beyond just generation. You need to create entities that are sufficiently financially stable to buy the power and to give investors confidence to invest in the sector.
So, okay, talking short-term solutions now, what can be done? Because I've heard, for instance, that there are some projects that one can deploy immediately and maybe in a year boost generation by as much as 1,000 megawatts. What do you think?
Absolutely. I think that we need to plug the distribution losses. There's power being generated. We have more generating capacity than we actually get to the ultimate consumer. So
that should be the initial focus.
Absolutely. At the same time, you can't stop. You have to look at short-term and long-term solutions because the actions today are things that you then realize in the future. So the longer-term solution is to continue the power sector reform, which is what the president has been doing to try to constitute the boards of the distribution company and get them functioning properly so they achieve cost recovery. It's very important that you achieve cost recovery in order to be able to pay back your investors and banks who have lent into the sector.
Okay, now let's look at our policy in Nigeria in the context of Africa. Obviously, I know, for instance, you are doing deals, or at least working on deals across Africa. I've heard, for instance, that in the Cape Verde, the AFC just announced today that they've made an investment into a wind power project that is going to boost electric generation by 25% in that country. And it sounds to me like others are getting it right. We've heard, for instance, also that Ghana is hoping to move from 2,000 megawatts to 5,000 megawatts, and some investors are already coming on board to see how they can move that forward. And in fact, they are looking to export power. So what can we learn from Africa that you think we need to apply in Nigeria?
The key thing to learn is implementation. We're not short of policies. We know what the answers are. We know what the right policy initiatives should be, but we haven't implemented. What we found across Africa is that those countries are further along in implementation. So, for instance, KenGen in Kenya is approaching the markets to raise bonds. They're partially listed on the Kenyan Stock Exchange because they have got the right structures to attract investors. And we need strong independent regulation. Unfortunately, Nigeria Electricity Regulatory Commission is now being run by a sole administrator after the board was dissolved. The previous commissioners were asked to step down. Now that doesn't instill confidence, especially for potential international investors wanting to come into this market. What we've seen that's encouraging is the AFC is going out to invest in countries like Cape Verde. UBA is also very active across Africa, where we're looking at various power opportunities. Right. We are also looking at opportunities at home, incidentally, but those deals tend to take a little bit longer because of the policy issues that we need to resolve here.
So let's even look at a hypothetical case now. For instance, the whole Marina, Lagos, Victoria Island area, where obviously most big businesses are based in Lagos. There's always been talk of getting a special power project to feed this area, because if you can just do that, the impact on costs generally for those businesses will eventually trickle down to the economy. But it seems we're not, and I think I've actually heard of a project that's moving along those lines, but it hasn't taken off.
Well, absolutely. There is work being done. The Lagos State government is very active in promoting independent power projects to look at specific captive markets within Lagos, whether to industrial area or to business district like Marina, Victoria Island.
Right.
So, you know, there's a transaction being discussed.
Right.
Having said that, again, the useful thing about Lagos, because of the concentration of businesses here, is that you have viable distribution companies. So as soon as you privatize a core distribution or Ikeja distribution companies, they will be able to attract the funding, and they can contract with independent power producers to get these projects off the ground. But even before the privatization, I think the Lagos State government has been very proactive in trying to get these deals to happen.
And then maybe let's move on to financing. Is that an issue in the context of moving this power sector forward? The local and, of course, internationals who are looking to move in, are they having challenges with financing?
It's certainly an issue, because if you look at the generation licenses, you get an initial license for a year, which is then renewable. If you're going to be lending long term, you want to be sure that the license term is actually going to stretch beyond the loan repayment term. So for that reason, we need to talk to the regulatory authorities to start issuing longer licenses. The reason they're doing it is understandable, because they want to discourage speculation. So if you take a license and you haven't done anything with it in a year, then you don't get renewed. But having said that, to give banks, investors confidence to come in, they need to see a longer term commitment to make sure that you can actually recover your financing over the period of the license. That's one of them. And you know, there are other issues relating to, you know, the cost of getting the right cost of gas into the power production. I mean, the government is looking to diversify sources of energy. So you're looking at, apart from gas, you're looking at coal, you're looking at possibly nuclear. There's been some talk around that. But whatever you do, it needs to be you need to achieve cost recovery. You need to be able to get your investment back. And at the moment,
the structure of the license is a challenge.
Yes, and the structure of the industry is still a bit of a challenge.
Okay, maybe as a last final point, I don't want to leave infrastructure without talking about Main One. This is big news from last week. The cable is online right now, the first open access submarine cable in West Africa. What are your expectations in terms of the significance of that coming on board, especially for Nigeria?
Main One is a fantastic development, because you're going to open up the whole area of e-commerce to Africans and Nigerians. You're going to be able to attract business process outsourcing, like all the sort of growth we've seen in India with the call centers, etc., internet banking, media. You know, Nollywood is all over Africa, and you'll be able to download movies. Nigerian music is played across Africa. You'll be able to download movies and music. It will certainly boost the economy and help accelerate GDP growth.
So the second wave of the telecom, or should I say the IT move in Nigeria?
Absolutely, I agree. And there are higher margins on the data traffic than on voice right now, because there's significant competition in voice with declining, average revenue per user. So we're very much looking forward to developments.